Welcome back to Morning Trade Live. I'm Sam Bartas. So joining us now is Corey Johnson, Chief Market Strategist at Epistrophe Capital Research. G'day, Corey Johnson.
Glad to be here.
Thank you so much for being here. All this eye-watering CapEx, I mean, $650 billion from just 4 companies. Why has the market got indigestion?
There's this really complex thing going on. Like, CapEx announcements are bad for companies, but when they make the announcement, we've seen companies lose market share the bigger their CapEx announcement. We saw with Amazon last week. And yet we know that money is going to be spent. There's questions about the ultimate efficacy. Are people going to pay for AI? Are OpenAI and others going to be able to come up with the cash to put up this money? But what we see is clear. To me, it seems really clear that Microsoft and Amazon and Oracle and others are going. We came with a list of kind of the 6 big spenders there, but they're going to spend this money, and they're going to spend this money on the equipment that goes into data centers. So, for the investors in your audience, I think they want to be cognizant of where that money is going to be spent. Certainly, when we imagine what's going to happen with jobs, what's going to happen with the economy, where people are going to be and be putting their money to work, it's going to be in those companies that are making the components that go into data centers, well beyond semiconductors.
It's interesting that the Dow hit 50K off the back of these announcements last week. What does that tell you? Because I was listening to Ed Yardeni, who said this is going to be extremely stimulative.
He's a good guy to listen to.
And he's a smart guy. And, he's been talking about the roaring 20s, as we know, as well, throughout this decade. But who do you see? Because, we've seen the price action in companies like NVIDIA, Broadcom, AMD off the back of that, which tells you something. Who are going to be the biggest beneficiaries from all that money, do you think?
So there's no question the chip makers are going to be the biggest beneficiaries. We expect about 36% of the spending will go to semiconductors. Part of our predictions are that margins are going to increase, that semiconductor makers, because they're in such short supply, are able to raise prices and capture more of that big spend. And when we're talking about nearly $850 billion to be spent in 2027, which is about our prediction, that's a lot of money going to semiconductor companies, but that's a lot more money left over for other companies. So it's everything. There's been some attention paid to power. I think networking is going to be huge. Optical networking components, fiber companies like Corning, the companies that are managing those optical networks like Lumen out of Seattle. We're going to see real big growth in all of these companies. And you've seen it in the performance of the stocks. I've sat in this chair and talked to people about companies like Coherent, a stock that I actually own, but companies like Coherent and Fabrinet and Applied Optoelectronics and weird companies like that that are doing incredible things with lasers and optics that are going into data centers, scaling up, scaling out, and now scaling across to data centers. That's where the money is going to be spent, and there's a lot of money to be made there, both for the companies and for investors. What
about memory? Because obviously this has been really the big story of 2026, it feels like. These stock prices have just been to the moon. When you look at some of those. But, as a level of constraint, do you see it as a risk when you've heard, who is it? The Apples, the Nintendos, the Qualcomms, and most recently the Cisco's coming out. And this sort of being somewhat of a fly in the ointment.
It goes down the chain, right? If more and more chip production is going towards AI data centers, there's less available for the other stuff, including our phones and so on. And so memory prices going up, margins going up for all semiconductor companies, as I mentioned. To me, the biggest tell about the long cycle that we're in with AI spending is, in fact, the CapEx plans of the memory makers, specifically Micron. What Micron has said about their CapEx plans is, to me, so bullish about the entire AI industry. They are investing more and more. Now they're doing acquisitions to acquire more capacity to build chips. That says to me that they expect a lot of orders for a long time here, because they put CapEx spending, they're very careful about those plans. They could be wrong. But we kind of see across the industry that companies are expecting this to go on for quite a while, and that's really bullish for the companies supplying data centers.
And the Microns of the world, the CFO of that particular company actually had to come out and sort of calm the market jitters just in recent days, talking about the HBM4 chip trying to clear the air as far as, I suppose, some of the miscommunication or perceptions out there that, maybe Samsung was coming in and eating its lunch as well. I'm just wondering, as far as these eye-watering numbers that they're throwing out there, how are you thinking about some of these hyperscalers and their spending discipline? The ability to kind of tap the foot off the brake a little, or tap the foot off the pedal to the metal, rather, if they're not getting their ROI that the market wants to see.
I think that they don't know yet, but they recognize it's a rush, that they can't not have the capacity when a customer comes in and says that they want it. So the build is going to be fast. The spend is probably going to be a little careless. So you're going to see, and who does that accrue to? The benefit accrues to those selling into those markets. So once again, Micron able to jack up their margins. The optical component companies able to jack up their margins. You saw it with Corning's numbers. They're raising their margins and raising their production and raising their CapEx as well. So it's clear that there's a lot more to come. I'm bored with the innings cliche. But it's clear there is a lot more to come in this AI spending and data center build-out.
Yeah, we'll certainly be watching. Corey, really appreciate it. We have to wrap it up there, unfortunately, but really enjoyed talking to you. And pop by again soon, please, even though it's cold.
It's cold here in New York.
I'm glad you did it for us. Corey Johnson there, the Chief Market Strategist at Epistrophe Capital Research.